Alrighty, my friends, welcome in. It is Friday, May 16th, 2025. It's been a good week since we've had our broadcast, so thanks for being here. We're going to go ahead and take a look at the broad picture of what happened here over the last week. It has been a bit of a choppy market, but despite that, we'll look at some of the notable rotations that we got, and then we'll talk about what we should expect for this morning and look at what's happening here on the charts, where we are, and all that. So you can see right now we are up, and this level right here is the 61.8 extension of the major bullish leg that we're currently pushing in. So we will talk about that in just a couple minutes, and we are finding a little bit of resistance right now, right off of there. And interestingly enough, in just the last minute or two, we've got our beautiful bounce right off the 200 and the VWAP here. Again, not trying to cherry pick anything, but this is how the night has transpired so far. Bears tried to hold the market down below that major eye level, and now they're popping it up, and we're coming right up into, this is a major area that I want to talk about. So let's go up to the 60-minute chart so we can get a bird's eye view of what happened here since the beginning of the week. Friday was a total chop fest, if anyone recalls back to last week there. The market didn't really do anything but just meander back and forth. A low of the day coming right into that roadmap area and bouncing out and kind of bouncing inside of there, but still a very messy day. But you will notice if we zoom in here to Friday, that they came right up, in the high of the day on Friday was basically to the tick, right to that roadmap level there. So if you were looking for a short in the pre-market, came right up, gave it a kiss, and that's all you had to do on Friday, was get short from that roadmap level in the pre-market session, and you would have got the whole sell-off, which did end up being a good 30-40 point pullback. So that's how Friday transpired. And as we came into this week, we got a beautiful gap up. This was nearly 100 points. I think it was 60, 70, 80 points to the upside. And if you look at what happened here on Sunday's Globex session coming into this week, all you had to do was buy the first pullback on Sunday's Globex session, and you got the entire bullish push for the week, and you took on no risk. I mean, we're talking a couple ticks there. So if we were to zoom in right into that area, take a look at what happened. The market opened right up here, right? We gapped up. So the market closed actually right at that roadmap level, gapped up, opened up here from 57.60 down to 56.80. So yeah, just about an 80-point push. And they pulled back. And if you were looking at this, maybe we can actually go down to the 512 here and zoom back, because there was actually a really sexy situation that built up right there. So let's go all the way back. Here's the big gap up. And if you were watching this using the tools that we use, or at least looking at the levels we look at, looking at the moving averages that we look at on our short time frames, this is how the Sunday Globex session transpired. They went ahead and began to pull back out of the Globex open here, kind of pushed into the VWAP and held it, pulled back, and the first short opportunity was right off the roadmap level there. So you had a beautiful short opportunity to the tick off the roadmap level, no risk, or you could have shorted the back end of VWAP again there, and it brought you right down to the next roadmap level there, where not only did we have a test of the roadmap level to the tick basically, but we had our fast moving average coming up to meet up with it at the same instant. So if you were watching this on Sunday's Globex session, you had yourself a near perfect, picture perfect trade setup from there. And it was even a divergence, because if you look, RVI was way higher than it was when the market opened, and price was way lower. So we had divergence, we had our roadmap level, we had the fast moving average coming up, and how often do we see the plays right off a fast moving average? There's a reason that this is on the chart. And again, for Sunday's Globex session, if all you did was buy that first roadmap level off the FMA with the bullish divergence, that's all you had to do for the entire week, right? So if we go back to the 60-minute chart, let's see if I can find that. And we might have to bring this back in. I don't know why this happens like every single time I go and try to bring up this chart now, every time I do this. Maximize. There we go. So if we go back to the 60-minute chart, that's that setup that we just looked at. Like right there is the play, and it never came back. So we were talking about maybe a point of risk from that pullback, and then you can see we're now nearly 300 points higher now as we come into Friday here, right up into, like I said, this major retrace or extension area we're going to talk about. So just one last time, I want to emphasize here, this is Sunday's Globex. You got your perfect short to the tick off the roadmap level, and then your long here off the next roadmap level gave you 200, 250 points to the upside with almost no risk. And you could even see in the Sunday's Globex session, you got another short opportunity off that roadmap level again, holding it, coming right back to the fast moving average for another long opportunity. And then once they got through it, they pulled back, and again, there's the FMA and that roadmap level to the upside now for the continuation. So you had a couple opportunities in there to buy right there, and then once we got through it, either buying it to the tick or putting your entry right around the FMA, nailing that low, and then getting that push, right? And then you can see here as we came into Monday morning, interestingly enough, right into the roadmap level for the pullback, right into the roadmap level for the bounce, and then to the tick off that roadmap level for the pullback to come right to the FMA once again and test into the major roadmap area for the pullback. Okay, and then they came right back to that previous support area, which was our roadmap level, held it to the tick on the second test. Still, this is a break of like 2 or 3 ticks, and then got that pop out. So this is just happening here in the pre-market going into Monday of this week. So great opportunities. But let's go back up now to the 60-minute chart so we can talk about what we're seeing here as we come into this morning. And so far, so good for that play right off VWAP and the 200 here in just the last couple minutes as they test into the FMA. So let's go back to our 60. Let's see if I can pop it up this time without any trouble. Of course. What are we doing here? It's like I've never used NinjaTrader, even though I've been using it for nearly 10 years. Okay, so back up to our 60-minute chart. Let's take a look at where we're at right now. In fact, what we might have to do is jump up a couple time frames here to see the whole context of things. So we'll zoom out maybe to our 60-minute chart. This has been marked up quite a bit, but let's look at, see what you're seeing here with these circles. These circles are highlighting major rotations off of major retracement levels. So, when the market was selling off from the all-time highs, they came up right into the 38% retracement of the sell-off. That became the beginning of the next lower swing high, or the lower swing high for the push lower. So that was a nearly perfect 38 retrace to push us all the way down. And if you notice, we had our extensions of that leg. So we're going to talk a little bit about fibs and why I like them so much. We had our sell-off. We had the hold at the 38. And then our extension levels from that bearish leg gave us a highlight right around here at 53.86-ish, right here around 51.54-ish. And then finally, the 100% extension of that bearish leg that we were in was right there. You can, maybe you see the line, but right there was the 100% extension of that leg, basically completing that leg perfectly. And that was the scene of the bullish bounce. So here are some beautiful examples of why I like to rely on fibs, especially on higher time frames, because many times they give us clues way before the continuation happens. So back in March of this year, as we failed from this area, guarantee if we go to our news reports from then, we would be talking about the potential for this being the continuation to the downside to potentially test the major low and come out to these extension areas. So again, down nearly perfectly to that 100% extension of the bearish leg. And then that's where we started to find support for the bounce. And interestingly enough, that pullback, if I can, maybe it's on the weekly here, that pullback, which again was the 100% extension of the first bearish leg from the all-time high area. There's the 38 retrace. There's that 100% extension we just talked about. Not only was it the 100% extension of the bearish leg, but it was a near perfect 61.8 retracement of the bullish leg that we were in, right? So if you zoom out further, we were in this strong bullish push ever since the lows of 2022, right? In this low here, we had all the high time frames cluing in for a bullish bounce back in October of 2022. And if you were in our chat room in October of 2022 or our live broadcast, we were talking about the potential for this being the beginning of a major rotation to the upside. So we were in this bullish push. We got our retracement, and the 61.8 was right there. So we had a confluence there of the bullish legs retracement and the bearish legs extension. And interestingly enough, that's where we found support. For the last month or two, or the last month and a half, we have just been rallying to the upside. So beautiful recovery. You guys remember we were in a bit of a downtrend to begin with, and then Trump announced the tariff schedule, and that's when we got the whole bottom to drop out and come all the way back. So beautiful recovery so far. We are way above the major retracements of this sell-off now. And now we're up here. So let me go back to that daily time frame and talk about this extension level that we're testing right now. So hopefully I kind of made the case over the last few minutes of why I like to rely on these fib extensions and retracements, especially on higher time frames. And let's look at the current leg that we're in right now. Okay, what I'm going to do is actually I'm going to remove the writing so it doesn't make the chart look so messy. So let me go ahead and take these off. That way we can just see the general levels here. So first of all, let's qualify this and talk about why we are looking at these extension levels up above us right now. So what we have is we have the bullish push, again, from the 100 extension of the bearish leg lower, which also was the 61.8 retracement of the bullish push from, I believe, October 2022. We push out, and maybe let me bring this up a little bit, and let me get rid of that. So we had a beautiful rally from that area. We got the pullback here, and then we bounced just in front of the 61.8 retracement of this bullish leg now. Okay, so this was the beginning of this rally that we've been in now for, again, about a month and a half. And that right there is the 61.8. We missed it shyly, but the 50% was also probably sitting right around there. And we typically find the rotations right around the 38, right? This was the 38 retracement of the bearish leg, right around the 50, right around the 61, or somewhere in between the 50 and 61. So for all intents and purposes, it was still a near perfect textbook retracement of this nice bullish leg that we got. And then we started continuing in the direction of that leg. So what did we have up above here? We had, again, the bullish push, the retracement of that bullish leg right into the 50 to 61.8 retracement, and then the bulls continued going. And the first resistance to the upside, looking just at fibs alone, was right here. And what is that right there, sitting right there? That is the 27 extension of that bullish leg. Right at the 27 extension, we get a 100-point pullback. It might have been more than that. We failed from about just above 5,700, and the market came right down to just below 5,600. So over 100-point pullback. And where was the resistance? Right at that 27 extension, right? So beautiful there. Then they even came back, peeked into it. There was actually a nice bearish divergence up off that high. I don't know why that's not marked. It might not be marked because we didn't get the continuation in the direction of that move. But we got a bearish move, a bearish potential signal on that day, and we pulled back again from that area, right? And then we began the breakout to the upside. That brought us into this week where, again, you should remember just a couple minutes ago, we talked about this beautiful 80-point gap to the upside for the bulls. So we continued up, and now you can see this is how the week has transpired so far. And interestingly enough, they are coming right into the 61.8 extension, right? And that's where we're sitting right now. It doesn't mean that the bears and the market is going to have to pull back now, but it is a very good area of resistance. So that's where we find ourselves coming into this morning. I just wanted to kind of show you why I rely on fibs. And actually, there's another super sexy situation that happened in terms or from the perspective of these fib extensions and retracements. And that is when the market sold off. So I kind of failed to mention this before we started looking at this current push that we're in. When we sold off from the all-time highs and found support right at that confluence zone of the two fib extension and retracements, we bounced up, and where did we fail? Nearly to the tick at the 50% retracement right there. That began our pullback. So if you were to measure that sell-off down to that low, the 50% retracement was right where the bulls came to, right? We came from this area, that confluence area, came up, and the major swing high that led to a 400-point pullback right there was right off the 50% retracement. Okay? So all this stuff, if you know how to draw the fibs correctly, give you some of the most notable rotational areas in the chart, right? So we had that 50% retrace of the sell-off, failed from there, but then defended the 50 to 61.8 retracement of that bullish leg. And that brought us up for the first failure off the 27 for a 100-point pullback. And now here we come in this morning, and we're testing right up into that 27 extension area. Right, so this is a great area of resistance as we come into this morning. We also have somewhere right up in this area, and if we go to the 1 hour time frame so we can just look at the actual levels, we do have two levels of major resistance up above us here. So this morning, if the bulls do go ahead and break through the very level I just talked about, that 61.8 extension level right there, around 59, 59 quarter, 59, 59 half. You could split hairs there however you want. But right there, if they can get through that area, and we do have a roadmap level just 2 points above it, if they kind of get through it there, if they can get through this pocket, this right here, right around 59, 83, 84, and this area right here around 6,002, are the next two areas I would expect to see the bears jump in and try to pull the market back. The reason why I say that, now each roadmap level above can be the scene of the next major pullback. But these two levels stick out a lot to me because of what happened in the past from that area. And I don't know if we can see it here on the hourly. So I'm going to jump up to my daily time frame so we can see what I'm talking about. So here we are right now, somewhere right around 59, 59-ish. A little bit further up, we have that 59.8384 I just talked about. Well, let me just mark this and we'll make it yellow so it stands out. And let's go back to earlier this year. You can notice that there's a major swing low sitting right there around 83.84, and that's where we then got a beautiful 400 point bounce, right? So the major low all through the end of January going into February of this year, right there around 83. If we scoop back just a little further here, yes, it was messy in here in January, but coming back into November of last year, almost perfectly to the tick right here around 82, 83, 84. That's where we then got, again, a 300 point bounce, similar to back what we just talked about in February of 2025. So we've got these beautiful demand zones, and even as we came into December here, we came into that general area and did bounce out over 100 points before they went ahead and kind of came back through it. We even got another notable bounce of about 50 points, or I'm sorry, yeah, about 30 points back here in January. So there's something, and then actually, if we come into this year and go into the sell-off, you can see right there very clearly, came right to it, almost to the tick, 59.83 area, and bounced all the way to 60.70, almost a 100 point bounce from there. So I know it looks messy here from a daily perspective, but if you zoom in and you look at the actual rotations, a lot of them happened right in that area around 82, 83, 84. A little bit further up is that 6,002 level, and that's what brings you right into that secondary area where right here you can see major support, swing through into the 83, come back, and then come right into that 6,002 level for this bounce to the all-time high. And you see it right in there. You can see the swing right there around 6,002 right there where we came in and got this major push out. So if you kind of just look generally from just a visual perspective, something is going on in the chart right around that 83, 84 to 6,002 area where we have major demand in the market, where the bulls seem to jump in pretty often. So this morning, like I said, if we start to push out here and come up into this demand zone, that can become a supply zone or an area of resistance for the bears to jump in. So I'm just trying to make an argument for this morning that if they don't hold here from the extension level we were just looking at a couple minutes ago, we do have some resistance right around 83, 84 and right around 6,002 that makes sense for a larger pullback. So those are our targets this morning going into the upside. So if the bulls can indeed, like I said earlier here, get through this major resistance that they are not too surprisingly failing from just a couple ticks in front of right now, if they can recover up through there, those are the two main areas I would expect to find resistance at. So what does that mean? If you're long here this morning, assuming they break out through this 62 or 63 area, I would be long targeting my exit just in front of that area. So if I'm long from somewhere 60, 70 here, I'm going to want to take profit a couple points in front of that area in case they do indeed come right into it and then pull back 100 points. So that is the idea here this morning to the upside. And what we want to see for the bulls this morning is if they do pull back here and they come into this 50% area, which is right around our magenta line, if they can defend from there, that is a good clue for a retest of that area. However, on the other side of things, if we do begin to pull back, and notice we do have this potential bearish signal forming from the overnight high, where we have this beautiful push right up into the expected resistance area and a nice push lower on RVI. So we do have divergence from that high. Doesn't mean it has to hold. We have divergence from there. So if the bears can pull price back through 50% of yesterday and hold below that area. So if we can hold below this major eye level at 59.0175 and 50% of yesterday at 0575, that is a clue for a retest of not only yesterday's low, but lower prices. So we could very well be coming down into one of these roadmap levels below. And it's anyone's guess what happens here now at these roadmap levels. Because we all see, going back to just even the last day or two, when we come into these levels, it's very possible that that begins the beginning of a major bounce. So we've got targets to the downside here. If the bears can get price down through that pocket right there, and if they get through that pocket, I'd be targeting just in front of that 91 area, just in front of that 73 area, just in front of the low of yesterday, in case they come into it and bounce from there, and then down into these other levels. So that's kind of our roadmap here for this morning, and that is the general signals that we are seeing right now. We do have a 4-hour potential bearish signal from our high. We do have an hourly potential signal that might actually become official if we close down below here. So these are clues for the bears to pull price lower this morning. If they can't get through that pocket, it is a clue that we can come up and retest. But if they can hold below this pocket, it is a clue for not only a test of yesterday's low, but potentially come into these deeper roadmap levels below us. All right, so that concludes our pre-market for this morning. Just a little bit of housekeeping here, FYI, to my members. I will be on vacation next week, so there won't be any broadcasts or news reports unless I'm able to get to my computer and really spend time, but I will be on vacation, so most likely I won't have the time. So next week I will be out, and then the following week, the week after that, we are beginning the week with a holiday. We do have Memorial Day weekend. So we will kind of be closed here next week, and then obviously Monday of next week is the holiday. So I will see everybody, all of my members, on Tuesday of next week for our news report release for the beginning of next week of that week. And so we will be on a little bit of a hiatus here for a couple days. So I will see my members on Tuesday of next week. And to everybody else, most likely we will see you not next Friday, but 2 Fridays from now when I'll be back in my pilot seat. So have a great day, guys. We will see you all in about 12 days or so, or whatever it happens to be. Have a great weekend, and enjoy Memorial Day weekend next week as well. So take care. Bye-bye.